Welcome back, everyone. If you're a focused learner looking to figure out the real gears turning beneath the global economy, well, you are in exactly the right place. In today's Explainer, we're taking a structured, deep dive into three major financial maneuvers that happened entirely out of the mainstream spotlight. These are the invisible wins. We're talking about massive structural shifts in the fintech world that definitely won't make the evening news, but absolutely redefine how money moves, how companies profit, and how consumers interact with their banks. So get ready because we are unpacking three distinct stories of companies experiencing some major structural glow-ups. Okay, let's dive right into this and lay out our roadmap for today. First, we'll look at the fintech group chat. Second, Klarna's new partnership with JPM. Third, we've got CPI Card Group. Fourth, New Mexico becoming a bank. And finally, we'll wrap it all up with the big fintech takeaways.
Starting with Section 1, the fintech group chat. 3 sudden wins on a single Thursday.
I really want to frame this recent news drop using a metaphor we can all relate to, because last week felt literally like a group chat where everyone suddenly announced good news at the exact same time. You'll look at your phone on a random Thursday and boom, we've got the friend who got the massive corporate promotion. That's Klarna. Then there's the friend who quietly crushed a side hustle nobody was even paying attention to. That's CPI Card Group. And the friend who leveled up their whole life status while you weren't even looking? New Mexico. We're going to analyze all three of these distinct personas to see who is actually winning in fintech right now.
Moving on to Section 2, Klarna joins JPM, the highway on-ramp.
You know, Klarna built an absolute empire on the buy now, pay later model, but they just made their first ever integration official with JPM Payments commerce platform. And this brilliantly illustrates the sheer scale of what's at stake here. $2.6 trillion. That is the massive merchant transaction volume JPM handles annually, making them the largest merchant acquirer in the United States. So this isn't Klarna picking up some niche, small-scale tech partner. Not at all. This is Klarna plugging directly into the primary plumbing of American commerce.
To really grasp why this matters so much, we have to talk about invisible rails. This is the underlying infrastructure that processes these huge transaction volumes. For the longest time, we really only thought about Visa and MasterCard as the infrastructure players who mattered. But JPM is increasingly playing this exact same role. If you are a buy now, pay later provider today, you absolutely need to be wherever those rails run. Think of it like this. Getting on these invisible rails is like being in the group chat that actually plans the trip, rather than just showing up at the airport and hoping for the best.
So, merchants on JPM's platform can now simply flip a switch to turn on Klarna's full suite. That includes paying in full, interest-free installments, and longer-term financing. But the crucial point here, the absolute magic words, are zero additional tech integration. For smaller retailers who desperately want to offer flexible checkout options but just don't have the developer resources to build it from scratch, Klarna just effectively paved a frictionless distribution highway straight to their checkout carts. It's a massive win.
All right, Section 3, CPI Card Group crushes it. The quietest great quarter.
While everyone is busy watching the flashy app names and fintech, CPI Card Group, the folks in Denver making the literal physical plastic for U.S. banks, quietly put up numbers that would make Silicon Valley extremely jealous. Now, what's really interesting here is how this completely unflashy physical business saw Q2 revenue jump 15% to $149 million. But the real jaw-dropper is their net income. It surged a staggering 294% year over year. This was driven by strength in their secure card solutions segment and aided in part by a $3 million tariff refund windfall. They literally just hit a company record for first-half revenue.
But hey, it's not just about making money, right? It's about financial hygiene. Let's contrast their net leverage, which dropped from 3.6 times a year ago down to 2.7 times today. The company even redeemed $26.5 million in senior notes after the quarter ended. To use our relatable terms, this is the financial equivalent of quietly paying off your credit card balance while everyone else around you is still arguing about how to even set up a budget. They're just steadily strengthening their foundation without making a big fuss.
Now, to give you the complete, objective picture, we always have to look at the full board. Management did flag one soft spot, their prepaid solutions segment. They noted that they expect continued choppiness and weakness in open-loop demand, meaning those general-use prepaid cards, stretching all the way through late 2026. But honestly, even with that headwind, CPI is like that teammate who never posts on LinkedIn, yet somehow secures a promotion every single year.
Section 4. New Mexico becomes a bank. Leveling up to Banco Multiplay.
So Nubank's Mexican arm recently leveled up from a lighter savings license known as a SOFIPO into a full Banco multiple, putting them in the heavyweight category, right alongside legacy giants like BBVA and Santander.
Let's move to and see how this builds a massive foundation for New Mexico. This upgrade unlocks Cuentas Nomina payroll accounts. In retail banking, this is absolutely the holy grail, because whoever owns the payroll tends to own the entire financial relationship, the loans, the insurance, the investments, the whole shebang. With only about 36% of adults in Mexico holding these accounts, and roughly 90% of those folks trapped in legacy banks, New Mexico is stepping into a seriously huge gap in the market.
And here is what becoming an actual bank means for consumer trust. Under their old license, customer deposits were protected up to about $12,600. As a full bank, thanks to Mexico's IBAP guarantee, that protection rockets up to roughly $201,000 per customer. It is literally the difference between insuring a used sedan and insuring a house. If you want people to trust you with their life savings and their paychecks, this massive leap in protection is exactly how you do it.
The momentum here is just undeniable. New Mexico exploded from 2.1 million customers in early 2022 to over 15 million today, firmly establishing them as the country's largest digital bank. They're projecting to reach break-even in Mexico by Q1 of 2026, and the parent company has committed a massive $4.2 billion to this market through 2030. Now, to keep our analysis perfectly balanced, we should note that Wall Street isn't uniformly convinced. Bank of America recently downgraded parent company New Holdings over some executive departures and credit concerns in Brazil. But even keeping those concerns in mind, this new banking license in Mexico is absolutely the clearest growth catalyst the bulls have been waiting for.
Finally, Section 5, the big fintech takeaways, the invisible wins. Let's do the so what bridge. Look at these 3 glow-ups. Klarna landed a $2.6 trillion highway via JPM. CPI Card Group quietly banked a 294% profit surge by focusing purely on physical essentials. New Mexico graduated into the payroll big leagues to capture lifelong customers. And this brilliantly illustrates that true scale in finance isn't always about who has the flashiest new consumer app or the loudest marketing campaign. Not at all. Real success right now is about API distribution, high-margin B2B profitability, and deep structural consumer anchoring, like those payroll accounts we talked about. So what does this all mean? I want to leave you with this provocative question to think about as you navigate the financial news this week. Who is really winning the fintech race? Is it the flashy apps desperately fighting for screen time on your phone? Or is it the invisible infrastructure quietly powering the global economy behind the scenes? The biggest wins this week for sure weren't the loudest ones, and as focused learners, that is exactly where we want to be looking. Thank you so much for joining me for this explainer, and keep your eyes on the invisible rails.